Investors and traders, welcome to the channel. Market Chat pattern today is 11th of May 2025. Hope everyone is having a good day. We'll take a look at the key markets for the stock indices. We'll take a look at the Indian stock market, the German stock market, the UK stock market, and then of course the US stock market indices. Time permitting, we'll try to also take a look at some of the sectors as well. So this video is going to be a little bit shorter than the normal videos. It's just because I do not have too much to add in regards to the patterns than the video I did last Thursday. So there's just not much to be added. Just we are watching those particular levels very carefully. As always, this video is for educational purposes only. It is not a financial advice. Okay, so this is the Bombay Stock Exchange index called SANSEX, the Indian market. And here, ever since this pattern has formed right at the confluence of 1.272 expansion and 61.8% Fibonacci retracement, we have seen the market go sideways and pull back a little bit. There is some geopolitical stuff happening. You can Google about it, but I believe there's a ceasefire or something like that announced, so that should be pretty good. We'll see. And if we get good news but bad action, that is then direct market feedback that this market could actually pull back quite further. This one is actually a pretty important resistance level. Even if there's a gap up from here, it'll be really important how the market will close for the day, and we should begin to look for two consecutive closes, whether the market remains strong or it begins to pull back further. Right, and then let's take a look at the HSI, which is the Hang Seng Index futures, and here's right at the 61.8% retracement, just gone nowhere. You can see that this is the mother bar, inside bar, another inside bar, another inside bar. So it's just showing a lot of market is just coiling inside, is just waiting for a big breakout. Now over the weekend there was some news about the progress with the tariffs with regards to China. So some good news was coming out. Now let's see how the market will react, and we'll give it 2 consecutive days. And if there is good news but bad market price action, then again that it will be a direct feedback coming from the market that what the participants are actually thinking in terms of what is actually happening, just not the news. Now German DAX. Now just look at German DAX. It's just made a new all-time high last Friday. Really narrow range trading range day. It's just the market just was up by quite a bit. It was up like 146 points, but that is in comparison to the previous close. But on the intraday basis, very narrow body. But look, it's a new all-time high. So the 7th of April was a very powerful bottom for it. It looks like a lot of money has been repatriated from US markets and gone back into the German market. The European markets have done much better. And could the US market be doing something like this? We'll discuss that in a bit, okay? Now let's take a look at the FTSE 100. This is where we go. Here we have this head and shoulders pattern formation, and market went boom down, and now where it is, it's right at the 78.6% Fibonacci retracement and also 1.272 extension. Now it hasn't pulled back that much. This is how much it had pulled back further in the previous market symmetry concept. So we could see a pullback right in the 20-day moving average, but this market is actually it hasn't pulled back further that much. It looks strong. Could it be on its way, just the way the DAX is, to make a new all-time high? It could happen, and we could see because we have the 1.618 extension of the AB leg taking us to pretty much where the previous all-time highs were. So this is what is happening in the UK market. So the European markets have been actually performing better than the US market. Now let's take a look at the Nikkei, which is the Japanese market. Here we go. And what we are looking at is basically look at the 78.6% Fibonacci retracement. It's just market was not able to break above it. This acted as a pretty strong resistance level. And then it's gone, which looks like a double bottom formation right here. But the reality is this market is just really retracing. So this is just a retracement. Here we go. And there we go. So we can see it's just reaching about 61.8% retracement, but if we go to these highs right here, it's right at the 61.8% retracement. So it hasn't even taken out this swing high out of 26th of March 2025. There is a lot of weakness in this market. Now let's take a look at the US markets. We'll start by taking a look at NYA, which is the New York Stock Exchange Index. This is a pretty broad index. It's not tradable, but I believe once upon a time back in the 80s, I believe it was. But then I think when they introduced the ES futures contract in 1983 on the CME by the Board of Trade, a lot of volume began to move in that contract of the S&P 500 E-mini future. The full point won the $500, a point won the big one, and then the mini futures were introduced much later on, and now we have even the micro futures. So I believe that's one of the reasons. There were some really key players in New York who actually dominated this trading volume in this index. Anyway, what we are looking at is this market is really approaching this 78.6% retracement, very close to ABCD as well. And then last Friday was really a peculiar day because look at the narrow trading range, it's almost unchanged. So the market is signaling something. Maybe it's waiting for something for a breakout. So we are watching this as a potential resistance area. Let's see how it will perform, whether we get a breakout with the upside or the market pulls back a little bit. We'll have to wait and see. But the important thing is the 7th of April low is really, really important. Now let's take a look at the SPX. This is a daily chart. Nothing has changed too much in comparison to the study we did on the video I did on the last Thursday. Last Friday was just a inside bar, and the market is in this zone, which looks like a distribution, but could also be an accumulation, because if it's an accumulation, then we'll see a breakout to the upside, which means that, you know, sometimes the markets have what I like to call a propeller shaft pattern. So it's like a higher basing pattern. So it could be one of those higher basing patterns right here. So the market consolidates at a higher base, and then like a propeller shaft, the market then just begins to break out of it. So we'll have to wait and see, but it's also really close to the ABCD and the structural point C. So just watching this really, really carefully. But if we have you know, a really nice price action over next Monday and Tuesday, then this market could be off to the races as well. So this is really interesting. And here we go. This is the weekly chart. Now here I am going to show something, because the 7th of April low is a very, very important low. This low was in time and price. So when price met the time, the pattern is complete. It's a completed pattern. And then there are also some significant low cycles operating here. I'll try to do a video about it sometime next week. And because of that, we have a really important timing, which also came on the 7th of April. Not just based on the Fibonacci, but just also based off the counting low to low, etc. as well. So based on that, there's a possibility, there's a good chance this market could actually in 2025 make a new all-time high, which might come out as a surprise for some. So between 6,500 to roughly 70,000, 7,000, 6,950 might be one of the, you know, we could target that. Now, whether it happens straight away, I don't think so. I think the market will have to go through a fair amount of gyration with the possibility of where the market is on the daily pattern formation, might actually come back into the trading range, try to even test these lows here, maybe even make a slightly lower low, but as long as the 7th of April low is held on a closing basis, then the chances are we could actually see 6,500 level being reached. Now this is, I'm just throwing out there, we'll be watching these levels really, really carefully. This just kind of reminds me, remember the study we did in March, where we looked at when the market closes below the 200-day moving average on NASDAQ, for example. The study was done on NASDAQ index, on the cash index, in a long time below the 200-day moving average, and the market goes below 4%. below the 200 moving average in the next 10 days, we have seen big pullbacks, and then even the market actually going into a bear market later in the year. And in some cases, the market, I believe it was in 1996, the market actually had a really nice rally and then made actually new all-time highs. And then it was after quite some time, it just kind of rolled over, and there was a big pullback or a bear market, which presented itself. So I'll put a link for that video in the description. You can have a look. So that scenario might play out, and this is why I am actually putting this out there. Let me actually put a question mark right next to it. So let's see what's gonna happen. Here we go. Here we go. Okay, so yeah, because 2025 is a peculiar year, because if we look at we don't really go too much into the cycles, but there are cycles like the decennial cycle where you go and look at what happened 10 years ago. So you can go and have a look at 2015. There was a lot of sideways market which happened in 2015. Then in 2015 in August and I believe in October there was some really nasty pullbacks, some market crashes, in other words, that also took place. However, if you move back to 2005, that was a positive year. 1995, the market actually performed really well. And that way, if you go back even further, 1985, for example, then the years have actually ended positive. However, there's also a caveat that if it also happens to be a new a year after the presidential election and there's a new president, then the market has not performed that much better. But if you combine these two things, there is still a positive expectancy for the year end. So we'll discuss those things. I'll do another video, and we'll look at this together. But that statistics does exist there, so this is why we are looking at this 2025 in a particular way. Okay, and now let's take a look at the S&P 500 futures. Here we go. It's just doing a consolidation that took place last week, and on the weekly, on the daily chart, you can see that just really narrow range trading day. NDX, and then we'll move over to some of the sectors. Here we go, and you can see that we have this ABCD right here. The market just consolidating right at the 61.8% retracement. So either it's a higher basing pattern or we see a pullback, and the pullback can actually bring it. This gap was a little bit gap was filled here. Maybe it can bring it down here. Maybe in this gap here. We'll have to wait and see what sort of pullback we get, if we get a pullback, or it just begins to break out from here as a higher basing pattern. But it is reaching in this zone, 78.6% retracement, 61.8% retracement, and here is this AB equals CD right there. All right, so now let's take a look at some of the sectors. So the XLF, the financial sectors, and the KRE, which is the regional banking index. I've done a separate video about it, posted this morning, so just have a look at that one. So now let's take a look at some of the other sectors. Okay, so let's start by taking a look at XLRE, which is the real estate ETF. So XLRE. Here we go. This is the real estate select sector spider fund, and you can see that it's got a really nice rally after completing this ABCD. And in fact, this is a 1.618 expansion right here. Here we go, right to the tick. You can see that. So it's a really powerful combination. And in fact, this ABCD, it's just not an ABCD, it's an extended form of it. Here we go. There we go. So we got a confluence level coming right here. So this 7th of April low is also really important for it. And what we have seen is a nice rally of it, but we can see that this one is kind of, looks like it's getting into some resistance level. The good thing is it's broken above this symmetry, so that is quite positive. Let's see, going back to, here we go, right at the 61.8% retracement. So yeah, we can see some sort of a pullback, maybe it comes and touch this. So I think what the market might be anticipating is, if you look at this, this is like a channel formation, sort of a channel formation like this. So it appears to be moving in a descending kind of a channel formation. And there's a chance that it could go and hit these levels, but from here, because the double bottom right here is at a nice rally, so I'm looking at it as a range bound formation. But if it continues this strength, then you know, this might just have been a bear flag, and we could be looking at this market moving higher, which will be really good for the real estate, because it'll indicate perhaps the market is anticipating lower interest rates or something, and then we could be in fact looking at this formation as an inverse head and shoulder formation. So the head, left shoulder, right shoulder. There's pretty nice symmetry right here as well between the shoulders. Break above this, then could actually target these highs. So that is another way to look at it. So I think you know, we are in this formation, which is a potential double bottom. Well, it is a double bottom because look, the market has gone on a pretty high. So really interesting, and the kind of a bear flag formation, the market could break out of it. And just from the retracement perspective, right, very close to the 78.6% retracement. That's it. Okay, so now let's take a look at the XLU, the utilities. Here we go. And the utilities also had a really nice rally off the 7th of April, and now it's just kind of, you know, gone sideways. Let me take a look at this on the, here we go, the weekly chart. So there we go. So really nice rally off this. If it continues to break above this swing high, it's got a chance. We could be looking at ABCD. So because of bullish pattern formation right here, we could be looking at 85, even 92.50 as well. And then let's take a look at the consumer staples on the weekly chart. It's just range bound, but still quite well held, 38.2% retracement. So I think it will remain more of a range bound affairs in the staples. And then if we take a look at the XLY, which is the consumer discretionary, I think this is where there's a lot of weakness. It went and hit this level. It's just not, look at this rally in comparison to even real estate. It hasn't moved that much. So I think you know, there is weakness in the consumer sector, especially the retail side of things. Here we go. I believe this is 38.2% retracement. Yeah, you can see this right there. So yeah, that needs to improve. I believe XRT is the retail ETF, and you can see that how much weakness exists in the retail sector. I mean, this 7th of April low, and the market hasn't done anything. This just shows the consumer is really tight, and the consumer discretionary and such stocks are likely to be impacted. Even we have seen Walmart. Let's see, Walmart. It had a really nice rally from the 7th of April lows. This is where the Walmart earnings came out. They gave a warning with regards to the future revenue, etc. And then the market sold off right in the 38.2% retracement, and then which also happened of the week of the 7th of April. So you know, I mean, this is the testament to these numbers, how these work. And right now it's right at the 78.6% retracement, and we have had we have a negative weekly close. So it went much higher than I would have thought. So I think it's still got a chance to move lower because the 78.6% retracement. But I think this move might play out to be more of a complex correction if it is correcting from here. And the reason I'm saying this is because Walmart since the 2010s has returned 650%, nearly 650%, and it's just gone parabolic since the COVID lows. And this is the last time it happened like this was back in the late 1990s, and yeah, in 1999 it peaked, and then what we had was a decade. You can call it a lost decade as well, because the market did not break out at all. It only began to really break out of this trading range back in 2013. So there you go. Something like this could happen again with Walmart. It is possible, and even if we take a look at Costco, here we go. Costco is doing something similar. And it's a pretty expensive stock as well, but it gives very nice dividend. How much is the dividend it gives? Let's have a look. $1.30. Oh, there you go. It's gone really parabolic, and yeah, these retail stocks, they can go in a really long period where they do nothing. And Costco has done something like this back in the putting in a peak in 1999, 2000, and then for a decade it's just gone nowhere. So just think about this, okay? Then let's take a look at the healthcare XLV. Wow, so healthcare seems to be moving lower. We have the head and shoulders pattern on it, and really nasty week for it, down 4.22%. And it's one of those sectors supposed to be more like a defensive, but looks like maybe some tariff situation is hitting these stocks. It's got a chance to actually come a little bit further lower if it breaks this 78.6% retracement, which is from here to here. That's not going to be good. It's already below its 200-week moving average. There's a lot of weakness in this one, so be careful with this one. And then let's take a look at the select sector. This is the materials, and the materials had a nice bounce, but not as strong as the bounce we have seen with some of the other ones. But again, as long as this 7th of April low is held, it's got a chance to rally, but I think it's going to be over for it if the 7th of April low breaks down, as is the case with many of these markets that we are watching. All right, so now XLE, I think this is the last one I'm going to do. The energy is just stuck in our trading range with the crude oil prices moving lower. It's just hanging in by a thread right here, but the reality is it's broken this range, so the chances are it's actually moving lower, in fact. So if we just take a retracement, it's right at the 38.2%. even we can take this one as well. I think that's the first leg, and what we are actually looking at is basically if we use the ABCD approach, it's like this, and if we use the measured move approach, then we can actually take a look at this like this. Oops, no, I don't want this. And we are looking at 67, 66, 66.50, and 59 thereabouts. Okay, and I think that might just be a retracement from about a 50% retracement of this entire move higher from the 2020 March lows. So this is what we are watching in the key indices worldwide, of the major indices that we like to follow, and the US market, and some of the sectors that we took a look at. So thank you very much for watching the video, and if you found this video of educational value, give it a thumbs up. I will really appreciate that. It just encourages me to bring more videos out for you guys, because I feel that it's of educational value, and people appreciate that. So I also appreciate your thumbs up. And then if you want to subscribe to the channel, then please do. And also hit the bell icon button. That way you'll not miss any new videos. You'll get all the notifications from the channel when the new videos are posted. Something really important. And then if you want to support the channel, then the link for the donation is in the description. I will also really appreciate that. It will just help me cover some of the costs associated with running the channel, such as subscriptions, etc. So thank you very much for watching the video. Good luck, good trading, and speak to you guys soon.